Greater Oceania, Indonesia, Australia, and New Zealand. Video 2 by GURP3. Indonesia has the largest economy in Southeast Asia. According to Heritage.org, Indonesia has an economic freedom score of 64.2, which makes it the 69th freest economy in the world, which its overall ranking is above average for their region in the world. As you can see by the chart below, we are above Saudi Arabia, but below India and China. Indonesia's income distribution does pretty well, as they are 16th in the world for nominal GDP. Their GDP PPP, which means purchasing power parity, is 7th in the world. As you can see by the chart below, they had an increase in disposable income in 2008, but it has significantly dropped and then consistently gone up since 2012, and you can see the household income over 10,000 has a constant increase over the years 2006 to 2018. The Gini index is used to gauge economic inequality. 0 is perfectly equal, while 100 is perfectly unequal. Having a 40 shows that we're pretty equal, but more or less in the middle of the group. Indonesia has seen a positive economic growth over the past couple decades, but only the richest 20% of Indonesians have enjoyed that growth. Most Indonesians considered income distribution in their country as very unequal or not equal at all. Indonesia has a rapidly growing middle class, and currently Indonesia is 16th ranked in the countries in terms of their nominal GDP. It is aiming to be in the top 10 by 2030. Their nominal GDP, as stated earlier, is 1.011 trillion, which is 16th in the world, and they are 7th in the world for the GDP PPP. You can see the chart below, which tracks the value of their Indonesian rupiah to the US dollar. It is kind of a little fluctuation, but since 2015 we have seen a little bit of a consistent raise. There are some risks in investing in Indonesia, such as high inflation rates, a heavy depreciating rupiah exchange rate, raising poverty, rising unemployment, and the GDP growth has slowed down tremendously. Now on to Australia. The economic environment in Australia, their freedom score is an 80.9, which is making their economy the 5th freest in the 2018 index. Its overall score has decreased by 0.1 point, but with higher scores for the government integrity and government spending indicators have offset the declines in labor and freedom and property rights. Australia is ranked 4th among the 43 countries in the Asia-Pacific region, and its overall score is well above the regional and world averages. Their GDP PPP is 1.2 trillion, and they've seen 2.5% growth and a 2.7% 5-year compound annual growth. Their per capita is 48,899. Australia's economy has been ranked as having the largest median wealth in the world. They have a high income level and they are very developed, and Australia's exports rank is higher than 87.63% of the countries in the data. They are the 6th highest per capita GDP. Their currency is the Australian dollar. Their conversion rate is about $1.35 Australian dollar to the US dollar. And you can see that their value to the US dollar has kind of been steady over the last few years. There are risks in investing in Australia. As you can see, some strengths and weaknesses listed. Some of their strengths are the mineral resources, which is one of their biggest exports out of Australia, and they have a moderate level of public debt, and they have very high tourism potential. Some of their weaknesses are they have a shortage of skilled labor, they have substantial household debt, and their disparity between their federal and states. Now, the economic environment in New Zealand is 53rd largest national economy in the world. Their trade is significant, as the combined value of exports and imports equals 55% of their GDP. And according to Heritage.com, New Zealand's economic freedom score is 84.2, making it the third freest country with the 2018 index, higher than Australia. They are also ranked third among the 43 countries in the Asia-Pacific region, and its overall score, of course, is far above the average regional and world. They have a GDP purchasing power parity, which is ranked 70th in the world. You can see that their GDP real growth rate is 3.5%, 3.6% in 16, and then 3.2 in 15. More of their GDP is, you can see in the previous years, is 38,500 per capita, 37,800 per capita, and 37,300 per capita, respectively, through 2017, 16, and 15. And their official exchange rate for the GDP is 200.8 billion. Some of their income distribution is, while the incomes in the household have gradually raised since 1982, wealthier families have seen a much greater rise compared to those that earn an average or low income rate. Recent trends show that this is only getting worse, and those on the lowest incomes are falling further behind. In fact, those of the lowest 10% are barely better off than they were 30 years ago, while the upper have enjoyed a 50% raise in real income. These inequalities in wealth are even larger than those income with the top 20% households, holding more than 70% of the wealth. This was only 46% some 30 years ago, while their Gini coefficient is 0.32. The currency in New Zealand is the New Zealand dollar, which is about 69 cents on the US dollar. And their public debt is 38.4%, and their revenues and expenses, as you can see below. Risks of investing in New Zealand, as you can see, strengths and weaknesses. Their strengths are some qualities of life, tourist appeal, while their weaknesses are dependence on demand from China and shortages in skilled labor like Australia.